The Bank of Japan kept their benchmark interest rate on hold today, trimmed its 2015 growth forecast from 1.7% to 1.2%, and now expects to achieve its 2% inflation target in 2017. So joining me to discuss this and more in this edition of Weekly Wrap-Up is Harry Daniels from Live Squawk. So Harry, do you believe that the BOJ will deliver more easing this year?
Hi, Louise. That's a good question. It's really it's a tough one to balance out, which I don't think we'll get any answers to after following today's meeting. Again, obviously, they failed to offer any additional easing today, but there's a Nikkei newspaper piece, I think, out this morning that basically said that policymakers are still seeking on ways to deliver more stimulus into the economy. I think it was the Nikkei newspaper saying that the fiscal stimulus will likely be, if there is one to come, they seem to think there is one, will come in excess of some 3 trillion yen. But again, until we get Q3 GDP growth data, which isn't, I think, mid-November, I think we'll have to wait until then. I know Daiwa and the Daiwa Europe analysts said they believe the stimulus will not require additional issuance of JGBs as and when it comes. But I think that, again, if you believe that newspaper piece, then we have more stimulus coming. But I think policymakers are still up in the air until they get GDP across the line.
Eurozone manufacturing and services PMI came in better than expected in October, but unemployment stood unchanged at 11% for the third month in a row. How would you rate the overall picture in the Eurozone?
Well, I think a lot of the forecasts for many have been a little bit out, really, overall, the overall strength of the Eurozone. This low prices environment, the low inflation environment, will continue to encourage, I think, the Eurozone economy. I think external factors, again, worries around whether we need to see more stimulus via accommodation from the ECB, underpin a lot of what we're seeing at the moment in terms of unsuredness. But with an unemployment rate, again, falling back with downward revisions to last month as well, I think overall we're not in as bad a place as maybe some doommongers would think. And I think with further ECB action, it could help prop up the continent as a whole down the line. Although I think on a structural basis with the unemployment, it's still seen as very high. If you look at those countries, maybe outside of Germany, so there is a worry about underlying unemployment. Because I do think that it's a bit deceiving to say yes, we're on the downward path. It's looking slightly better than we've seen in the past, when we've still got unemployment rate at 10.8%. Youth unemployment still running above in some, I think, on average above 25% across the continent. So there's still a lot of worries out there that need to be fixed. A lot of issues that need to be fixed, I think, in the short term for the Eurozone. But I do see just a slow, incremental upward path for growth, I think, over the course of, say, the next 12 months.
Now, UK GDP figures came in weaker than expected in Q3, dragged down by sluggish growth in construction and manufacturing sectors. Are these sectors a main concern for the UK? And do you see GDP bouncing back above 3% next year?
Yes, well, we reported from the ONS this week on the GDP figure, and that 0.5% print. Although, again, there's been a negativity seen with that 0.5% print, saying that it's weaker than forecast and weaker than previous quarters. But I mean, it's still a steady rate of growth. I don't think we should be overly concerned, but it does look sluggish in certain sectors. Again, the construction, which makes up, in terms of overall GDP contribution, 5.9%, which is lower than it has done. It's not the lowest I think it's been in terms of contribution, but it has been moving downwards. So in that instance, I'm not overly worried about construction in this term. A lot of the Q3 number apparently was potentially down to weather, poor weather over the period as well. So that may have played a part. And as I said, with 5.9% contribution, it's not the biggest sector really, and one that we should worry about overall. Manufacturing has had a generally decent trend, and I think the fact that it's starting to fall away a bit now, maybe natural. I mean, the global picture's an uncertain one again as well. The strength of sterling may be playing a part in some of that as well. So I'm not overly worried about the UK growth picture, generally speaking. But will we bounce back over 3% next year? I think there's a chance we could print around that 3% level, but I'd be a bit on the optimistic side in terms of that GDP print being able to sustain a 3% plus level in the next 2 to 3 years.
And taking a look at US third quarter GDP, it came in at 1.5%, slightly missing expectations. But apart from that, was the guts of the report healthy? And do you think a December rate hike is on the cards?
Well, I don't really think there's an overall. The probability has definitely moved up in the market. The probability of a December hike is now around 46%, which was up from 35% ahead of the FOMC and 26% seen last month. So I think the market tells you there's a higher probability. Again, some were a little bit surprised that we saw this explicit language within the last statement saying that there's a possibility that we could see at the next meeting a rate hike, which may be a bit more explicit than some would have liked. But overall, as long as they flag it between now and the December meeting adequately enough, I don't think it will surprise the market. I think it's fairly well priced in to the market that we'll get, again, at least one hike this year. But you never know. I don't think it takes a great deal to turn a central banker's stomach and turn them off course nowadays. We're in a new age of central bankers, I think, and the slightest bit of pain or any worry to an extent means that they're more likely to err on the side of caution and hold off from rates. I also don't think the fiscal policy helps at all. You know, we keep getting to the edge with this brinkmanship about government shutdown and defaults, and that doesn't help. That doesn't help policymakers, central bankers, really, and it definitely doesn't help the economy. And I think elections a year from now could potentially leave the Republicans in control of both the White House and Congress. So again, I don't know. I just think in terms of overall growth, there's a lot of uncertainty out there, external and internal. But domestically, I think the U.S. economy is on a decent footing right now. So, in my personal opinion, I don't see one hike being too damaging to the U.S. economy. It'd be more damaging for the markets, and I think the markets, even to that extent, have priced a lot of this in.
As always, Harry, great to speak to you. Well, that is all for now. Have a great weekend ahead.